So there's a lot of discussion in today's business culture, business discussions, talking about developing firm or company culture and the importance of developing that culture. And some of the leaders and the writers that I follow and look at, they make it seem like that company culture is the all-important thing in terms of being successful in the business. The idea, I guess, being if you can just get the culture right, then everything else will follow. How do you feel about that? And I mean, what's your take on culture and how do you approach that with the companies you work with?
What I tell my clients is you need to define your culture or it will define you. You need to be deliberate about what you want it to be, and you need to stay on top of it, and you need to communicate it, because every person with a different personality that you bring in is going to change it. And so you want to bring them into the fold. You don't want them to create it themselves. And as a consultant, if I have to go into a company and they have a toxic culture or one that's broken or one that's not defined, that's a lot of time spent before we can get to the real work. Because until we fix that, it doesn't matter what we do.
And kind of picking up on some of what you're saying, can you fix company culture without people leaving?
You can. It's hard because the owners aren't going to leave, and it starts at the top.
Sure.
Right?
Yeah.
So if you have somebody who's negative or toxic, if you have a lot of naysayers, you can identify them, you know who they are. You can try. You're going to have turnover because once you start making changes, you're going to lose some.
Mm-hmm. Yeah, that's definitely, that's been my experience when I've worked in organizations that are trying to make any kind of cultural change, or if there's a merger or something where they're bringing in multiple organizations together, you probably inevitably lose somebody, if not multiple people. So kind of shifting from what you do in terms of the consulting and the practice that you have, I guess this may be somewhat inseparable, but I'd like to talk a little about your journey as an entrepreneur yourself, as a business owner. You're consulting with small businesses, and you yourself are now a small business. So when did you decide to start your own practice?
I really was fortunate. I had the luxury of transitioning to consulting with the company so that I had a brand, I had structure, I had a client base, and I had a paycheck, right? So there was a learning curve there. I took another job, the last position before I went out on my own, and I didn't last a year. And, when I talked about not being ready and not knowing, there were some things going on I didn't agree with. I spoke up, spent a year or years in a career of, when you're in-house, CEOs and management don't want to be challenged. They don't want to be questioned, at least not by HR.
Yeah.
And that's been my experience. And so I did. And I just got to the point, I'm ready. Mm-hmm. I don't want to work for somebody else anymore, and I'm ready. And so I took the leap, the big scary leap.
So talking about how it's a different landscape, how's working as an outside consultant? Expand on that a little bit. How do you find being the outsider different from working as part of the management team inside the company? What are some of those key differences for you?
As HR, we're advisors. We're not decision makers. We're influencers. And I would, give, I'd research, I'd talk to legal, I would give best practices, I'd give my professional recommendation. And we're not doing that. Like ever. So I needed some victories. And when you're consulting, they're hungry for it.
Yeah.
And they will listen. And it's a very different landscape.
Yeah. So talking about how it's a different landscape, how's working as an outside consultant? Expand on that a little bit. How do you find that being different than working as part of a management team? What are some of the key differences for you?
Well, the flexibility, the grind. years of, getting to work at 8 o'clock and getting the kids out the door and back to back to back meetings and just the grind, the fear of losing my job at certain points in time. So not having that is really liberating. Having the flexibility. When I take on a client, like from day one, it's we. I'm in there. I'm a consultant and I'm not an employee, but in my mind and in my heart, it's still we. And I treat them like I am and they're part of mine.
Sure.
I'm all in, right? And, but to be able to be objective and to be able to I tend to be direct, and consulting is more conducive to that than being in-house.
Yeah, I found something similar where most of my career, I've always been on the outside, being either in public accounting or consulting. I've had occasional opportunities to work for short periods of time, actually inside companies, working kind of with the client side by side like I'm a member of their management team. But we're talking like 6 months to a year at a time kind of thing, not multiple years. Last year, for example, I served as an interim CFO. And what I realized very quickly is the objectivity issue that you brought up, because I actually felt myself not being as objective as I wanted to be. It made me very uncomfortable. It wasn't the way I was used to working. And because I was becoming more and more dependent by being at the client site, sitting at a desk every day with my peers in the management team, with the client, and feeling the issues that they were going through. They were going through financial turmoil at the time, which was why I was there, was to kind of help negotiate with banks and deal with and kind of get the financial reporting in a place that we could actually discuss, talk turkey with banks, so to speak. And it became, and frankly, that engagement during that period of time also became a sizable piece of my income. And so I think just the environment of being there with them all the time and feeling the pressure of just like everyone else on the team, and then also of it meaning so much to my own income, I started to kind of feel myself not behave as objectively in how I was going about my daily work and how I was delivering advice as I normally would like to.
Well, and I think that's the value add, is when you're being objective, because I help them see things, through the HR lens is different than, they're focused on the service, they're focused on the product. They're not looking out what's happening internally. And so being at the table and being able to say how that decision is going to impact the workforce, that really doesn't always factor in, right, if you don't remind them.
So on the theme of you being a business owner yourself, what kind of challenges have you run into being a business owner?
Well, you don't replace that income immediately. Right? And you just don't. So that's a challenge. I think one of the hardest things was my pricing. How do you price your services? And how do you price what you do and the value of what you bring to the table, and worry about what will they pay for, right? That was the hard thing. When I went out on my own, I didn't know how to start a business. I didn't know what do I need to do, right, to make it official, and that was scary to me, right? I used Legal Shield Launch and it did everything for me. It was awesome.
Yeah, as a practical matter, I think that's often the way it's done, and that's often the path when you are first starting. So what you talked about flexibility earlier. What other kinds of benefits do you find being a small business owner compared to being an employee or a member of a company's management?
Not doing the grind. I love getting up now and enjoying my cup of coffee.
Yeah.
I never had time to do that.
Yeah.
Right? I was sleeping in till the last minute and getting ready and out the door. So I love that.
Yeah.
It's a really small thing, but I value that.
Yeah. I think you're probably similar to me in that you can use working on your own as a way to scale how much you want to work. You can determine how many clients you have at any point in time, or you're going to take on, and that's going to determine your overall workload. So if you want to grind it out, you can, and if you want to take it a little easier and you understand how that affects your income, you're okay with it, you can do that too.
Right.
So how do you go about? Well, I want to ask a different question because it's something I have in mind that I found in my own business. How do you go about bringing on other employees, or is that something you think you might do?
I would like to, very much. I have somebody in the wings. I just need the volume, and then it's determining what do you carve out, what do you piece out to give them, and it's hard when you're solo because you're doing everything. And you're doing the business end of it, and you're doing the sales, right? Because you've got to get new clients. And the struggle for me is I feel like they're buying me, right? That's the relationship. And so, but I do want to grow. I would love to have other people. I in the past I've run a team. I love that. I love teaching and engaging them in the whole process.
Yeah, I asked that in connection to the topic of flexibility, because what I found is, having kind of gone up and down in terms of having a team, not having a team, I leave kind of working in a company or in a firm, and I start my own thing, and it's just me, or it's very small, and I have all this freedom. And then I start bringing on staff and employees and partners, and even though I'm theoretically the one in charge, it's my business, that freedom goes away. And now it's back to, now it starts to feel more back to, I think, it feels like you're getting more back to working for another company, even though you're the person in charge of it, right? I think that's an interesting part of the whole thing, is that I think people think, if it's your business, you always stay in charge. But I think the dynamic of not being in charge, or the real issue is not necessarily whether you're in charge or not. It's more about, is it all about just you?
Right.
And if you stay as the solo entrepreneur, it's all about you, and there's a certain freedom to that. Even if you're the owner and the head of the business, and you start bringing on new people, as soon as it's no longer all about you or you and your clients, but it's no longer the internal organization is no longer all about you, you don't have that same kind of freedom or flexibility.
And I see that in my clients all the time, right? Because having employees creates a whole different dynamic, and it changes the focus. And a lot of times there's zero focus on that piece of it.
Yeah.
Right.
Yeah, I'd love to get your comment on a thought that I've had. In fact, I wrote a blog article about it too, and it was an idea relating to professional services. And my background started in public accounting and then went to consulting, but they're very similar kinds of firms in how they operate. And my article was talking about what I called a principal-centric firm, and my thesis of this article was that in small firm environments, which I've had experience with, as well as large firm environments. In the small firm environment, you have a lot of often principal-centric firms, and you'll have one or several principals in those firms, and they're highly credentialed people. They have the experience, and they may or may not hire people, but if they do, they may hire some entry-level or young people that they're using simply to assist them in continuing to be the person as the principal who serves their clients. And that's why I refer to it as a principal-centric firm, because by design, when they hire people, the firm is really all about them and their service to the client. And I laugh because my firm's called Tyee Advisory, but I actually don't operate that way. You'd think because I put my name in it that I operate that way, but I don't generally operate that way. And so I'm not saying that operating as a principal-centric firm is the wrong way to do things. I think that you could be successful being principal-centric, and you can be successful and have a different business model by being about growing the team and developing the team's skills and reputation with clients and with the community. So I think you can seek success either way, but they're different. They're different business models. They're different approaches. And what I find is that you have a lot of these firms that are principal-centric, but they talk about growing the firm.
And that part I find
it's
ironic.
a disconnect.
Yeah.
And so continuing on what you're talking about, so think down the road and think of all the baby boomers now that are nearing and looking at retirement. And that model, now what?
Yeah.
Now what happens? If you have that gap between the principal and this person who's just coming in to assist them, there's nobody ready to take over. So
Right.
what happens to the clients and what happens to the business?
Yeah, no, I've seen that exact thing in our profession too. You got to talk pretty fast to find somebody who's willing to buy your business when you're retiring, if before they realize that business is all about just you and everybody else. Yeah, I mean, what are they buying at that point?
And the different model is if you develop those people and they do have a career path and they grow and develop, then it's just a whole different ballgame.
Yeah. Yeah.
I mean, my preference, or in my head anyways, and what I profess is to grow the team. I think, I try to be self-aware enough to say that is my preference. I don't want the firm to revolve around me and my services per se. I'd rather be the mentor who's building a team with me and letting them become the primary service providers, letting them enjoy the profession and helping them do that. That's where I see my career and where I want to go with things at this point in my life and in my career. And I try to be self-aware about that's what makes me happy. And so I try to align that business model with that. I just think self-awareness on this issue is really important.
The other side of that is if there's firms like that and they will keep people 10, 15, 20 years. Well, things change. The good news, they've been here that long. The bad news, they've been here that long.
Yeah.
Right? And I see that all the time. And change is hard. And there's a lot of technology that if you've been somewhere that long, you don't want to learn it.
Yeah.
Right?
Yeah.
So
Yeah, that's a good point. Yeah. How do you go about getting new clients? What's your strategy for meeting people and building your practice at this point?
I have been mine's all been referral and word of mouth. I haven't advertised. I'm getting ready to launch social media and get out there and have more exposure. It's been word of mouth. I spent the first 2 years when I was transitioning to consulting, I was meeting with all referral partners, everybody looking for that partnership, right? Well, that produced, I have to tell you, very little, right? Very little. I met some phenomenal, great people, but I wasn't in front of the client.
Yeah.
And that was a learning process for me, right? I'm a member of a chamber.
Okay.
I'm on the board of the Tualatin Chamber of Commerce. So, that's a community.
Mm-hmm.
We do multi-chamber events. I need to do more,
It's hard. Yeah,
It's really hard.
You can spend your whole day just going to events and
Right.
meeting with people for networking purposes and not have any hours left in the day to actually
Right.
do what clients pay you for. So,
Well,
yeah.
it all goes back to the billable time,
Yeah.
right? And it's a challenge. And then you'll have a week, I'll get 3 calls,
Mm-hmm.
and a lot of my clients might be dormant because we've done all the hard work up front, and then something will come up.
Mm-hmm.
So it just ebbs and flows.
Yeah, that's a good point. How do you go about getting new clients? What's your strategy for meeting people and building your practice at this point?
I've been pretty consistent, within a $40 range. It depends a lot of times on the size of the business. I did a nonprofit where I cut the rate. I don't have a formula. It's not scientific,
Right.
right? It's, it varies and it's hard. We're funny in this country. It's hard to ask for money.
So it sounds like it's very customized to the client and the client situation. Yeah.
It is. And that's just a hard piece of it. I'm getting better.
I've got Jack's salary that I've got to cover.
Right.
And,
It's
and
me.
how does this work out? Yeah. No, that's great when you can, and you got the freedom in those cases to kind of decide if there's work that you just enjoy doing that
Right.
you might be a little more competitive on that work. And
it could lead to more work with them, or it could lead to another, referral. So yeah, I have not mastered all of that.
Yeah.
Yeah, so I mean, pricing for professional services is a very complex topic. I've gone back and forth for years on how exactly I want to do it. Pricing by the hour is the tried and true method, but I've got mixed feelings about it. I read 2 or 3 years ago a book by a management consultant who made the case that pricing by the hour was not actually ethical. It kind of stuck in the back of my head. And then I saw on LinkedIn the other day as a meme, I saw that come up.
Right.
And it was like some kind of saying it had all these kind of thumbs ups or likes or whatever on LinkedIn for this, that charging by the hour was unethical because you didn't necessarily, there was no guarantee a client got an outcome from that. And it just inspires you to work more hours. And so I say that, kind of tongue in cheek because we all do it at some level. Most of us as professionals are charging by the hour, and those of us who've gone to some kind of fixed fee are basically figuring out the fees on a rate per hour basis in some way as well. But I think that the alternative that people talk about, of course, is the value pricing. Interested to hear your take on that.
And I have some projects. Right? A handbook is a flat rate. Training is a different rate, and that depends on the topic. Do I need to be certified for the topic? Do I not? Do I have a presentation already? How many people are going to attend? So training is separate. I probably don't capture all my time as well as I should.
Yeah, I mean, that's the irony of the ethical argument, right? Is that for most professional service providers, the truth in my experience is you spend 10 hours on a project and you kind of look at the bill and you're thinking, the client, really isn't going to feel good about paying for all that 10 hours. And so you write it down and you write it down to 8 hours and you only bill them for that. So, and so I think that the idea that billing by the hour is an unethical practice for professional service providers really cuts through us because we're on the other side of that, and more often than not, when I bill by the hour, we end up billing less hours than we actually spent because we know the client just wasn't planning to pay for the full amount of hours that we spent. So thank you for spending time with me here today. Is there something that I should have asked that I didn't? Something that you thought that I might ask you today?
I think we've been pretty thorough in covering all of it, from the history to how I got here to what my business is to being, on my own. It's been a great journey. I still feel like I'm early in it and have a lot of room to grow, but I've learned so much and I love sharing that. I meet with people who are getting ready to go out on their own, and I'm like, well, let me tell you some, what to look for, what the pitfalls, because you're going to make mistakes.
Yeah. No, that's great. I mean, it's just generally better to feel like you're at the beginning of something you enjoy than toward the end of something you just want to get done with, right? So
yes,
that's fantastic. Well, again, I want to thank you for joining me today,
Thank you.
Lisa.
And to our audience, thank you for joining us. And we're going to jump into our roundtable next. Okay, welcome to this week's roundtable. I'm here with Charlie Zigman and AJ Wheeler. Well, we got a few different articles that we've taken a look at, and I'll start us off this time with looking at something I saw come through Forbes, and it was about the title of the article. Let me see if I can find the title here. It was about California state taxes for small businesses, and it said, "Now California can assess taxes no matter where you live." Really, that was the title of the article, and they had an example case in there of a small business. It was actually a screenwriter who made money by providing the services, presumably of screenwriting. The screenwriter doesn't even live in California. The screenwriter lives in Arizona, and was providing services, I guess, across the country. I don't know why. It seems like most of your screenwriting probably would go to places in California, but the article inferred that not all of this writer's income was from companies or customers in California, but that there was a piece of it that logically was from California, and so the issue in the article was, okay, well, if you're sitting in Arizona providing services while sitting in Arizona, and you happen to have some customers in California, does that now mean you have to file a California tax return? And the answer, according to California, is yes. And I've heard this story before. The way this author talked about in the Forbes article was about he used the term that the taxpayer had a unitary business with exposure in California. But the other term that I've heard before, which came about, and California basically has been doing this now for a few years, which attacked service providers just like this, is the concept of economic nexus. Yeah. And that concept was that even if you are not physically located in California, you don't set foot there. If you provide services and the economic beneficiary, the benefit of the work that you do is in California, then California claims that you are subject to their tax system. And that was they didn't use that term economic nexus in this article, but that was exactly the issue here, was that this person they were talking about in Arizona, they took it to court. They took it to the California state courts and lost. The California state courts agreed with the California Department of Revenue that in fact they were subject to California tax under California laws. And so, yeah, I mean, that's pretty, that has a pretty broad brush, in terms of people and taxpayers who potentially California could go after, under that theory anywhere where they're providing services and the ultimate customer who's getting the benefit is in California. That's the standard. That's the new standard for them.
Well, I was kind of surprised. Excuse me. I was kind of surprised to hear the word unitary. Is that right? Unitary.
Yep.
And I was wondering. I had never heard. I've performed tax preparation before, and I had never heard that term used. Is that something that's commonly used in the tax law?
Not familiar with that either.
Yeah, it's. I think that the context of it didn't exactly fit the key issue in the article. It may have, in fact, also been an issue. I think that it was an issue. There was one sentence in the article that made reference to the fact that the taxpayer now had to apportion their income to California. So there's kind of a different issue here. There's one question as to, are you taxable at all in California? That's one question. The secondary question is, okay, how do you determine the tax base that's in California? Now, and this is kind of a statewide. You could ask this question on state taxation anywhere, right? State income taxation. How do you determine your tax base in a particular state if you are a multi-state business that actually has income everywhere, right? How do you determine what piece is California? What might seem obvious to the layman is, well, can't you just know how much business you did in California? Well, no, actually. There's different theoretical ways to do this. And if you actually did just know, if you actually were able to say, here's the amount of sales that I had exactly in California, and here's all the expenses that were specifically and only related to California, if you were able to actually do that theoretically, the term we would use for that is allocation. We would say you were doing a direct allocation of some of your income to the state of California.
These concepts actually apply in international taxation as well. We could be talking about the difference between income in the UK or income in the US as well in some cases. But what doesn't necessarily apply in international taxation is that the states in the United States have adopted this idea of apportionment, which is a different way of determining the tax base. It's not an actual allocation. So I would presume that your average layperson on the street, your average entrepreneur who's thinking about their state income taxation probably assumes that it's some kind of allocation methodology that you're able to determine your income actually in California. But in fact, in a lot of cases, you don't get to do it that way. You have to apportion it, which means what you do is you take all of your income from the entire, federally, the entire country, and you multiply it by a formula that is based on the amount of sales you have in California to total sales you have everywhere, and that's an apportionment formula. So you're basically saying we're assuming that if we take a percentage on related to something like sales or the amount of property you have in a state or the amount of payroll you have in the state, those are three common apportionment factors. We're assuming that if you have those, if you can derive a percentage from those factors in some way under the state's law, that percentage multiplied by your total nationwide income is a fair representation of your income in California or in some state. And so that concept of apportionment is not just a California concept, it's used across different states, but what can be different is how they actually do the apportionment formula. So that's where this unitary concept usually comes in. The term unitary really usually comes to the question of should you be doing usually comes to the question of can you actually do an allocation or should you be doing an apportionment? And if you're unitary, then you have to do an apportionment because basically they're saying you can't allocate. You really can't figure out how much income is just to California. So using a formula is the only decent thing to do, right? And so that's usually where you get this concept of are you unitary such that you have to apportion? You can't just allocate and say, I have California only income. And so I think that was kind of embedded in this article, but they didn't talk about that in very much detail. They just said he was determined to be unitary, therefore he probably has to apportion. That's all they said about that.
And then I think they gave a little, like a layman's definition. He kind of, threw us that aren't tax professionals a bone.
Yeah.
And kind of broke down layman terms what unitary then meant.
Yeah, and I think I think there was a statement somewhere in there, or an inference that most businesses end up being unitary, and that's my experience as well. That it's hard to get to a point where you're not unitary.
Yeah.
Where your total nationwide business is not interrelated. That you can't you're not in a position in most cases to say, I know that my California operations are completely distinct from all my other operations. If that were true, if you could say that, then you would say, oh, it's non-unitary, theoretically.
Well, it makes sense because the states have so many different ways of defining what constitutes nexus in each of those states, and so having an approach that allows you to apportion them makes sense.
Yeah, yeah. So really, bottom line, I think the unitary discussion in the article kind of takes the discussion in a different direction than really what the title was getting at, which is, in my mind, more of the economic nexus discussion, which is, you actually are taxable. How you calculate the income and the tax there is a second level discussion. But the first level discussion is, are you even taxable there? And if you have what they consider to be economic nexus, because the beneficiary of your services is located in California, you'll be taxable there.
And the biggest question in my mind, and I think the author, he kind of hinted at, like, I guess, ways to determine whether or not you're taxable by California based on some of those, tax cases that he was referencing. But what I didn't get out of him was things that ordinary businesses, for instance, thinking about the screenwriter, how is he supposed to know that the people that he's writing the screenplay for are in California? And what then would trigger him to then take a look at that nexus, kind of equation to know that he should file a tax return?
That's a great question. And I think, sometimes in taxation we have these things that we say we use kind of a counterintuitive statement for that. We say they're questions of fact. And when we say they're questions of fact, what we really mean is there's a factual answer to this, but nobody knows what that answer is, right? So it's like, the truth is there is a beneficiary, and there is certain people who either are or aren't beneficiaries in California, but you can fairly state that determining whether the beneficiaries in California or not, and who those people are that are in California, the beneficiaries, that may be very difficult, if not entirely impractical to do. And so we'd say, well, those are questions of facts. The facts are, if you had some way to determine them, the facts, there's a factual answer, but they're just very difficult to determine. And we see something similar on that between the states and also on an international scale, often with software. Because what happens in the software scenario is if you're a software vendor and maybe you have a large multinational company that buys your software, and then you ask, where is the economic nexus to the use of that software? I had a client one time that was selling software into Germany, into a company in Germany that was where the headquarters were in Germany, but the actual use of that software was most likely employees that they had in the United States. So the contracts and everything were signed in Germany. The whole transaction was consummated in Germany. So yeah, do they have economic nexus in the United States for the use of that software or not? Could be a question. When you're looking at when you're looking at the nature of those questions. And I would say again, it's sometimes the facts are hard or impractical to actually even determine, but they theoretically exist.
Well, because the same kind of scenario is running through my head. This guy's in Arizona. Somebody approaches him to write this script. They could have been in Arizona with him. He writes a script for him. They pay him the amount of money. They could even be shooting the movie in Arizona. But because the script is the basis for the film, and the film will be distributed and the revenue will go back to that California company.
Yes. Yeah.
Then, trickle down that's actually where the nexus was in California for that script. Even though he may not be aware that the company that he wrote and he was on set for the film, was a California company.
Yeah, I think that's a great analysis of the kinds of questions that come up. What I can't tell you is I don't know if that question has been resolved by the California Franchise Tax Board or the California courts. Not being a full-on California expert myself, I would kind of pause there and say that's a great theoretical question. It may or may not have an answer in California tax law.
Yeah, so the thing that I was thinking about is just that different states are going to have different answers as to what defines your nexus. And so I can imagine two states being involved in a multi-state transaction where they don't agree. Both states deem that you have nexus in that place. And so I would wonder how that would get resolved.
Yeah, that is and I don't know. I think that is a potential problem. There's been work. What I know is that there's been kind of conferences among the states to try to resolve that from happening. But ultimately, that would be Congress's job to regulate interstate commerce and ensure that's a highly unlikely scenario. And I think that the concept of using economic nexus is relatively new. So what I don't know is if there's been any work to resolve the possibility of two states trying to get the same income because of the economic nexus rules. I think a lot of times for really small taxpayers, that's less of an issue because the two states in question are like the state that happens to be their home state and the other state that is trying to claim that they have income there. And there's usually a process for when you're just talking between two states, the state where a business, it's his home state, its state of residence or domicile, and you're talking about the state that another state that it does business in. Usually they have state tax credits where they create a system that on one of the state tax returns they take a credit for the tax that's being paid to the other state. And so when it's just the two states like that, then I think they've got a mechanism to work that out mostly through that system. But I can see where it can get a lot more complicated if you're dealing with many different states and you have two or more that are claiming the same income. I don't know if the credit system would fully work that out or not.
That makes sense.
I also had kind of pulled down the PDF of the WeWork earnings call that they made. So this is SoftBank, and maybe we'll go over the backstory of this really quick for any listeners that aren't aware of the situation. So WeWork is a kind of a co-working open office kind of concept where if you are a virtual business and you need meeting spaces, or if you need a desk or an actual physical office address, you can basically rent an office or rent a meeting space and bring in clients or run your business out of that, and they kind of provide the essential administrative function and the place to do your business. Now, they've been in the news recently because they were set to go in an initial public offering, an IPO, and they were backed and juiced up with cash influx from SoftBank, which is an international investment group that invests in startups. And they had a very eccentric CEO who thought that this WeWork public sharing of office space was somehow going to change the world, or make world peace or something through shared office space. But that's besides the point. He made off with a golden parachute. He went and got fired from the company and was able to take some money from him. And the reason being is the financials and valuations that they were toting out during the IPO beforehand to private investors didn't match up with basically what the SEC had them file for their pre-IPO filing.
Oh, yeah.
So, yeah, and they weren't soliciting, the IPO, so I don't think they ran afoul of the SEC stuff. But what they were doing were they were using different metrics than just financial AR, credits, debits, all that good stuff, balance sheets. They were using, worker productivity or happiness among them, or, what percentage, were people happy to work at WeWork increasing from last month?
It's up 40%.
Yeah. We're kind of... So anyway, he gets ousted, and it comes out that this place is just bleeding money, burning through it so fast. I think they lost I forget what the number was, but they lost hundreds of millions of dollars in, just because their expenses that far outweigh their revenues, plain and simple. So what SoftBank did was they ousted that CEO, Adam, and I can't remember his last name, and he made off. And SoftBank decided they're in it for the long haul. They've invested too much money in this company, so they're going to see it through. And they were taking over to tighten down the reins and kind of rein in the spending and turn this thing around, because they believed that there was value there that they could then offer in an initial public offering and make their money back for their investors and themselves. So they had an earnings call earlier this week, and they distributed the material that was used in that earnings call, and it's, for lack of a better word, it's hilarious.
It is.
It looks like it's made by a first-year business student that's presenting their business plan for the first time, where sales will grow by 100% each year. And so we can probably cut to a picture of the slide that I picked out, but it basically shows EBITDA, which, if you don't know what EBITDA is, it's earning before income taxes and depreciation.
Right.
And so it's showing, and basically the reason EBITDA is used is because the taxes and depreciation aren't considered operating expenses. So it's trying to show a measure of operating income after all the admin stuff has been, shaved off. Depreciation isn't a real expense because you bought this stuff a long time ago, and taxes are to what taxes are. So this EBITDA line basically shows it going complete crashing. And then after SoftBank steps in, and it's magically going to turn around due to cost cutting, and it's going to soar. And there's still value there, and there's still the investors are led to believe that you can tell the reason why the presentation is on is so that investors don't start pulling or requesting that SoftBank sell this thing or just burn it. So I wanted to get your guys' kind of impression on. And I think this is a trend where people are using different metrics to report how a business is doing, besides like a bottom line or some kind of projection on how it's a realistic projection of how it's going to turn around. And I'm just wondering how maybe you guys feel about that, or anything else that you saw from that set of present, if anybody's had a chance to see it, or from the slide decks, because it really was no pertinent information in there from a true accounting sense, or from a true. They're throwing around accounting words.
Yeah.
But where their numbers are coming from, it's not like they offer a balance sheet or show or go through, how they're going to do this. It's all bar graphs and charts and colors. And
the bar graphs, I got a kick out of it because they had qualifiers all over it. It
Yes.
was like, these are projected, this one's a maybe, this
Hypothetical.
one's a hypothetical. Yeah. A bunch of just, good stuff.
Nonsense is what it was.
Well, I think, some of what you say, which is, intrigues me and worries me a little bit, just because we use WeWork, and it's actually a cool service, a cool business from a customer perspective, to be able to go in and use conference rooms or get a desk for the day, and they do provide clean, nice, hip spaces that are they've got some different amenities. And so, yeah, if the business plan from here going forward is cut costs to increase EBITDA, I'm kind of like, ooh, what cost are they going to cut? My beer? Is that what they're doing? Because if they cut the costs, I think there's probably some part of the customer base who probably might quit using the service.
Well, and that was one thing they talked about, and in that kind of slide thing, when they were talking about cutting costs, they were talking about not putting so much money into the aesthetic look of a place, and then not offering so many amenities to basically be what every other building renter is, but just by a per day, per week, per month kind of thing.
Yeah, because just for those who don't know, that one thing that's unique about WeWork is that when you go there, you can just drink beer as part of what you're being there to do. You can get free coffee, free beer as much as you want if you're working there, is the idea. And I think that's maybe a glaring hole in their business plan that they didn't maybe consider fully.
Yeah, probably.
Don't ruin the gravy train now. Wait until it just totally burns down. But
yeah, I think, and I guess I think one thing they have done is revitalize or re-inspire, I should say. Maybe not revitalize, because it won't be revitalized if none of these businesses are working, but they definitely re-inspired the shared workspace, temporary office business model, because the temporary office business model, there's been companies that have been doing that for a long time. There's nothing particularly new about that. It was the presentation of how they did it that was relatively new. And I know in the Portland metro area, I've seen 2 or 3 other companies that are basically look like they're kind of like WeWork knockoffs. They're kind of doing the same kind of thing. So I think they have re-inspired a kind of new, or re-inspired that industry a bit to make it hip and cool for people to have offices and share offices and use those kind of temporary workspaces.
yeah, like one of the knockoffs was We Work Together.
Oh, really? I didn't know. Oh, you got me on that one. I thought that was real.
It would be a good business name, though, right?
Yes, it would be. Yeah.
Same font and everything. We work and then just slap it together on the afterwards.
We work together. Yes.
Well, that does it for the None of Our Businesses podcast, the podcast that talks about what really matters to your business. Go ahead and hit that like and subscribe button and tell your friends about it so we can help grow this community. If you have any topics that you'd like for us to touch on, please leave a comment in the YouTube section. And you can always hit us up on Twitter, Facebook, or LinkedIn. And we'll see you guys next week.
Thank you.
Thanks, guys.